Today, Coinbase gets approved to offer crypto futures trading in the U.S. Crypto custodian BitGo raises $100 million in its latest funding round. And Circle's Dante Disparte discusses recent regulatory advancements for digital assets in the U.S. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Prices of major cryptocurrencies trading slightly lower once again. As of noon Eastern, Bitcoin was pretty flat, trading just above $29,000. That's according to Coinmetrics. Ether about 1% lower at $1,818. And Ripple's native token XRP fell nearly 5%. It was at 59 cents. Okay, let's talk about the top stories. Coinbase announced this morning that it has been approved by the National Futures Association to offer cryptocurrency futures trading to retail customers, calling the development a critical milestone. Coinbase said the approval will allow it to offer Bitcoin and Ether futures directly to eligible U.S. customers. In June, the firm introduced Bitcoin and Ether futures trading for institutional investors on its Coinbase derivatives exchange. Today's move marks a regulatory win for the firm. It's still in a battle with the SEC over allegations that it operates as an unregistered securities exchange, broker, and clearing agency. The news sent Coinbase higher in pre-market trading. As of noon Eastern, shares fell more than 1%. Today's announcement follows the company's official launch in Canada earlier this week as part of its push for international expansion. Next, crypto custodian BitGo raised $100 million at a valuation of $1.75 billion. The company noted that the money will be used to, quote, make strategic acquisitions and expand its secure and regulated custody, wallet, and infrastructure solutions globally. CEO Mike Belshey said the funding will help meet growing demand for regulated custody solutions around the world and will also help, quote, provide institutions, brands, coin foundations, and others with secure and seamless participation in the digital asset ecosystem. The raise comes less than 2 months after the custodian scrapped plans to buy its rival, Prime Trust. It also follows its launch of the Go network, which allows institutions to trade and settle both digital assets and fiat from custody. BitGo, which is currently the custodian for the creditors of bankrupt crypto exchange FTX, noted that since January, it saw a 60% increase in newly onboarded clients, a 200% increase in fiat custody, and 40 times growth in staked assets. Finally, GOP lawmakers are demanding answers from SEC Chair Gary Gensler regarding how Prometheum got SEC approval as a broker-dealer for crypto. Several members of the House Financial Services Committee, led by Congressman Patrick McHenry, signed this letter, which questions how the company beat out other applicants to get the SEC registration as a special purpose broker-dealer for digital assets. The letter also questions the timing of that conclusion. Specifically, lawmakers wrote, quote, the timing of the approval raises concerns that it was aimed at demonstrating that legislation is not needed because there is a workable regulatory framework for the custody of digital asset securities. We reached out to the SEC for comment. A spokesperson told us that Chair Gensler will respond to members of Congress directly rather than through the media. As part of a statement, a Prometheum spokesperson told us that the company, quote, purpose-built its technology with the goal to develop a market infrastructure for digital asset securities that is compliant with the federal securities laws. They added that the technology will serve as a building block for a compliant and orderly digital asset securities marketplace that protects investors and serves their best interests. All right, for our main story, Crypto World's Mackenzie Sagala spoke with Circle's Chief Strategy Officer, Dante Disparte, about recent crypto regulatory advancements in the U.S. and what he expects will happen next.
So 3 bills on crypto recently advanced to a vote in the full House of Representatives. This is the farthest that any sort of crypto-dedicated legislation has made it thus far. In terms of the stablecoin specific rules that have been put forth, walk us through what to expect in terms of next steps.
Well, first of all, it is a sign that despite the fact that the United States might be a little late to regulating the digital asset market segment at the whole of government level, there's nonetheless, I think, deep intentionality in this Congress to try to get this bill advanced. And specifically the payment stablecoin bill narrowly passed with bipartisan support in the House Financial Services Committee before the summer recess. And we very much expect that to be the first principal legislative agenda item for the committee to pick up in September. And obviously the road ahead is engagement with stakeholders in the Senate, continued engagement with stakeholders in the Treasury Department, the Fed, and others, where they want a federal floor, but continued state oversight of payments innovations in the country.
Now, it was my understanding that it actually advanced without that bipartisan support. So there's concern there around how it would be received when it went for a full vote. Can you walk me through the dynamic with respect to that?
Yeah, well, for one, I would argue that the real issue that was laid bare in the last hearing before the summer recess was politics and conduct in the House committee as opposed to the merits of the stablecoin bill itself. In no small measure because the bill bears a lot of the architecture and inherits a lot of the body of work that then Chairwoman Maxine Waters led in her Congress and in her committee that has now been picked up in earnest by Patrick McHenry. So you had 5 Democrats support the bill, largely a New York adjacent contingent and Wiley Nickel from North Carolina. And I expect it to be a more bipartisan process moving forward as we resume Congress later this year and obviously pick up an agenda of the United States competing with other countries around the world for regulating dollars on the internet.
I want to talk about de-dollarization. There are some questions as to whether the digital yuan, for example, could challenge US dollar dominance. Do stablecoins play a role in upholding the role of the US dollar on the world stage?
Well, there's no doubt. And I think the experience with Circle and USDC specifically over the last 5 years is dispositive of that, right? That over the 5-year run of this innovation, we have cumulatively processed more than $10 trillion in payments. USDC, courtesy of being designed on open technology and open infrastructure, is available in more than 191 countries and increasingly building permanent bridges between traditional banking and finance and this digital native, always on internet economy that we're talking about. So I do think there's a strong role of the dollar remaining the reserve currency, not only for the world, but also the currency of reference for responsible payments innovations. And candidly, you do not weaponize a currency, you weaponize the underlying rails on which money moves in the 21st century. So I have some reflections on that for the Bretton Woods Committee. And I do think that the requirement of legislation, the requirement of Congress to act is actually pretty critical. And it's not just about de-dollarization trends, it's also about national security interests and other exponential technologies that the US should care about for competing in the 21st century.
You mentioned earlier in our conversation the fact that the US is behind in terms of passing any sort of crypto legislation. In terms of the focus here, why not just look outside the US? Singapore today, for example, which has emerged as this thriving crypto hub, put forth a pretty comprehensive framework around how they plan to regulate stablecoins. So why not just look outside the US, because there remains so much uncertainty here?
Well, I would argue that Circle has taken a view, candidly, of a yes and approach to growth internationally, so that we could build a business inside the United States and also make that business and that business model an export product around the world. As you may know, we are a major payments institution in Singapore, so we're not only a beneficiary of the policy developments that were announced today by the Monetary Authority of Singapore, we're also an operating company, and we've made Singapore our Southeast Asian headquarters. We're also seeking a major license in France to be able to live and operate under the European market and crypto asset framework rules. And so wherever strong rules go, good investors and long-range companies like Circle follow suit. But I don't think it is a growth internationally at the expense of the United States. I think both things can happen in lockstep. And that's very much the posture that we have taken in engagement in Washington and inside the United States as well.
A lot of my reporting has taken me outside the US, and there seems to be this universal hunger for alternative payment systems. I spoke to people across the continent who said that, Tether transactions on Tron are a lot cheaper and more effective than turning to legacy payment rails in Africa. I just wonder whether you can speak to how stablecoins fit into this narrative of alternative payment systems that could, potentially eclipse what's already facilitating international transactions.
Totally. Well, look, in my vantage point, one of the main reasons I'm in this industry altogether is because we have unfinished work in the banking and payments sector. If to be banked around the world hinges on traditional brick and mortar infrastructure and traditional banking, then billions of people would be on the margins. And that void is being filled, and in not all cases by responsible regulated products, but that void nonetheless is being filled. And so in the same way that you saw a takeoff of messaging apps around the world, and particularly in emerging and developing countries, stablecoins are an interesting analogy to what mobile telephony was to being a part of the telecommunications wave. Mobile telephony has also created pathways for mobile banking and mobile money, and digital currencies are exactly that next breakthrough. I don't think this is revolution. I think it's evolution. People want dollars. They want dollars to be safe. And they're voting with their digital wallets, if you will, on that posture. And so much of the breakthrough innovation is actually global and in cross-border payments as well.
There's been a liquidity crunch since the banking crisis in March, when we saw three of the most crypto-friendly banks fall. The total market cap for stablecoins in particular has plunged 25% to around $120 billion. Last week, we saw PayPal jump into this US dollar peg stablecoin space. And I guess my question is, what do new entrants mean for this sector? Is it, a net positive, or is it just too many people competing over, not that big a pie?
Yeah, well, I would argue the pie is actually much bigger. And if we just consigned the payment stablecoin construct to digital assets and crypto trading, then I think it's a known market and it's a known quantity. And even there, you would argue there's space for more competition. The real prize, however, is not what happens in digital assets markets. It's what happens when these breakthroughs start to touch everyday payments. I mean, for example, today, 75% of all USDC in circulation is held off of crypto exchanges, suggesting that people around the world and businesses around the world rely on USDC as a store of value. I think that's a very powerful testament to challenging this de-dollarization trend. And so we very much welcome PayPal's entry, and I would argue that it's not surprising that as a company like PayPal looked to creating a more relevant, future-proof business model for its payments networks, that they would fall on digital assets and stablecoins particularly as the architecture for what that more inclusive future might look like.
Okay, that's all for Crypto World today, but we're back again tomorrow. We'll see you then.